So before I start this video, I want to apologize in advance. Forgive me if I sound a little lethargic. I'm actually down with a cold, and so I've been sniffling a lot, as you just saw. And so forgive me if my voice isn't great, or if I'm sneezing or coughing at intervals during the video. But this video is going to be a two-in-one. It is first going to be my general outlook on the entire trading year 2025. So this is one of the few times when the yearly time frame is relevant, and it's also going to be my preview or my analysis, what I anticipate to see in the markets for the second trading week of 2025, which is also the second week of January. So let's actually go to the 1 year time frame, and here we can see that, just looking at it now, if we have a candle signs, right? Last year was bearish. This was 2024's candle. What happened? We can see that 2024's candle did not take out 2023's high, and 2024's candle closed below 2023's candle. This generally gives me a bearish bias on the yearly time frame. So I'm anticipating 2025 to be bearish on Euro USD, which means a bullish year for the dollar. Now, of course, this is just an outlook on the entire year. There are going to be plenty buying opportunities in this year. There's also every chance that price finds support somewhere on this chart and that the candle rallies. But just from a candle size perspective, from a purely technical candle size perspective, I will have a bit more confidence taking short trades, at least in the early part of the year. Now, after that has been said, let's go down to the weekly time frame. And actually, before we analyze the charts, let's take a look at the calendar. So, the Forex calendar is telling us that next week there's quite a bit to look forward to. On Monday, there's German preliminary CPI, there's ISM Services PMI on Tuesday, JLTS job openings on Tuesday as well for the US dollar, non-farm employment change and unemployment claims on Wednesday for the dollar, FOMC meeting minutes. That's not the big one, that's not the rate announcement, this is just the minutes. It's not really a big event. It ain't at in any case, it's happening at 8 p.m. my time UTC +1. So I'm probably not going to be trading at that time. The big one this week is NFP, of course, non-farm employment change. And as usual, my plan is to do all of my trading between Monday and Thursday. There's nothing on Thursday, incidentally, so that's beautiful. Between Monday and Thursday, I do all my trading if opportunities are presented, and then I sit on the sidelines to see what NFP intends to do for the week. That said, if we go to Euro USD on the weekly, we can see that this November low that was created has been traded through and closed below. Now, we are still inside the monthly fair value gap. I've taken it off because I don't want my chart to be too crowded. But this whole area is a monthly fair value gap. Another reason I've taken it off is because I'm not anticipating it to push price higher just from the price action that we are seeing. So at least in the short term, I'm anticipating this low right here, this weekly swing point, to be taken. Now, why do I think this low is going to be taken? Is because this week traded very, very, very close to it. This week traded within 2 pips, about a pipette of it. Unfortunately, this news thingies are not going to let us see how close it came, but actually we can see. So if we just check the lows of the candles. What's this candle's low? This candle's low is 1.02227, and this candle's low is 1.02241, right? So about 2 pips ahead of this candle's low. Now, when that happens, what does it mean? It means relatively equal lows are performed. There's a reason that price came that close without trading through it and then started seemingly finding support. There's a reason. And from the way that I trade, we know that that means relatively equal lows are being created to eventually be taken out. What that also did is that this candle, Friday's candle, completed the formation of a bearish daily fair value gap. That's what we see here. Now I don't like this candle because it closed pretty much at the high. So on the lower time frame, there isn't a significant enough liquidity pool, right? So this is the 15-minute time frame. What I would have liked to see is that when price traded here, and the high of the day, I would have preferred for price to not close near the high of the day. I would have wanted to see price close something like this. What that would do is that it would have created a swing point. Excuse me, I'm so sorry. A swing point that could form the basis of a potential liquidity sweep as price trades into the daily fair value gap to then take out the low. Now, that's what I'm anticipating anyway during the week. It's just that I don't like the formation so far. Now, it's very possible that Monday opens up and the Asia session just trades lower. That will do what I want to see so that Asia high can then be taken out for the short trade. However, since Euro USD isn't looking ideal, I take a look at GBP USD. And GBP USD actually does what I'm anticipating a bit better. So I'll be looking to trade the pound dollar a little bit more intentionally than the euro dollar. So here we see that the daily fair value gap has formed as well. But we see that unlike with the euro dollar, you see that there's a small wick, very small wick. I like to see that. I like to see those wicks because it gives me a smaller time frame liquidity pool. If I go down to the 15 minutes, we can see that this is exactly what I was talking about. So you see that whereas Euro USD closed basically at the high, GBP USD traded a little lower. I like to see this sort of thing when my fair value gaps form because it means that on Monday or Tuesday or whenever in the week, this is what I want to see. I want to see price open. I want to see Asia session do something like this, preferably consolidate. And then when London kill zone, or if London consolidates as well, when New York kill zone rolls around, I want to see something like this. Price takes out all of those highs, all these highs, trades into the daily fair value gap, gives me a nice 15-minute bearish engulfing candle or a shooting star candle. And then I'll look to take a short trade all the way back to this low right here, which I'm pretty sure should provide me much better than a 3-hour trade. So this is my outlook for the week. There isn't much else that I'm looking at. As you know, I don't really look at the DXY. I'm not interested in gold either. I'm just monitoring it. New Zealand dollar. So you can see that there's a weekly fair value gap that was created a couple of weeks ago, but the daily hasn't created the same bearish fair value gap that we see on euro and pound. So not really looking at the New Zealand dollar. But if price trades above all of these highs and trades into the weekly fair value gap, then gives me an entry. I might look to take a short trade. I'm happy that it aligns with my overall bearish bias on the euro dollar, pound dollar, New Zealand dollar, Aussie dollar. So that's what I'll be looking at for this week. And that's what I think 2025, at least in the first 3 months or so, is going to look like. I'm anticipating a continuation of this bearish momentum.